Hello, Greg.
Hey, Mike, how are
I'm good. You do
you? Sure, my,
not. There's your picture.
how are you?
All right, look at you with a sweater on today.
Did you? I'm gonna let me send this. It's snowing here. We gotta, we gotta. I'll have to pull this up and show people. Hang on, let me. I don't know how well you can see this. Can you see that at all? I mean,
Oh,
I-
there you go. Yeah. Is that your door cam?
no, I'm driving. There's probably,
Oh,
depending on where you're at, there's like 2 to 3 inches of snow on the ground here.
well, it's going to be 80 degrees in Chicago on Saturday.
Yeah, I'm ready. Trust me, I'm ready. I'm gonna be in Atlanta for a wedding, so it's gonna be in the mid, I think, yeah, 82, 83. So sign me up.
Yeah. No, actually, I could take this silly thing off. Um, so I got a new setup. Look at my fancy
Yeah,
mic.
no, that's awesome. It's pretty. You look like a legit podcast host now.
I'm like a podcaster now.
um, so I got a ton of. Are we live here?
We are live,
Okay, okay.
and it's
I'll watch
noon.
my mouth. I've got a lot of stuff here.
Yeah, I think I have a chart I want to show that I'm very excited about. It was on Bloomberg. It's housing starts versus housing completions.
Yeah, it's funny. I have that. I brought that up too. So great minds
Oh,
think alike.
cool.
Um,
Well,
yeah,
let's kick this off. Hello, everybody. Welcome to Lumber Futures from the Free Seats. Mike Wisniewski here with Materials Exchange and Greg Kuda, Westline Capital
yeah. Westline Capital
Strategies. Excellent.
Uh,
So,
uh,
what a difference a week makes.
yeah. I mean, like obviously, technically, we're trying to bottom. I think we'll see it in the basis charts that, from just speaking to Eastern and Western, some of the big guys out there. May's traded up to 950, 150. So May's up about $120 or so. At the high water mark today off of the lows here. So you could make the case, and the basis charts don't really do it justice, but you could make the case from where I've heard cash numbers that May is trading at a premium to cash right now. So that massive discount
Wild,
is no
right?
longer such to where I think I would go as far as to say that May's at a premium to where certain guys can buy 4 inch and 6 inch in the West and East right now on SPF.
Well, we got, like you said, we got a lot of numbers today. Let's get into it here.
Yeah, so you can see, there you go. So we had obviously housing starts, and housing starts came in higher than forecast. So you can see building permits 1.873, starts were 1.793. I think this is the highest level since 2006.
Yep.
I know you referenced this chart, Mike, and I've got it in the next. So this shows permits, starts, and completions, and you can see starts and permits continue to trend higher, and completions can't get out of its own way. So the reality is permits and starts are kind of forward-looking indicators. Completions are, homes under construction and housing completions. You can't consider it a sold home until it's completed. So even if it's missing a garage door, front door, kitchen sink, it's not a house, it's not a completed home until it's finished. So you've got completions here. You can see it right here, 1.30. So best we can do based upon labor, based upon supply constraints, a whole bevy of issues. We're still completing somewhere in the 1.3 something as far as homes, versus
So
permits being way out ahead versus starts being way out ahead.
what happens? I mean, is that green line, like statistically, it has to go above the other two, right?
At some point, I mean, you're going to continue.
Unless you
So,
have
so
all these homes that aren't
yeah.
finished.
Well, and I had somebody, Kirk Miller with Elof Hansen, who usually listens to this, kind of said they should just stop stop selling all these homes you can't complete, and go complete homes. So you get the convergence here. But I think there's lots of headwinds, and I've got some other housing charts here, but there's lots of headwinds facing. And at what point does the demand start to diminish? I think you're at that threshold now, especially with the entry level segment. So we'll kind of jump forward. So this gives a historical perspective. This goes back to 1960. These are total units. So these are your total housing starts that the government references every month. So you can see, you've come a long way since 2010. You're kind of within, you're above 62% retracement now. So we all know that there's this big housing demand, housing shortage out there, which is good. But at what point does housing affordability, interest rates catch up with demand? And I think you're getting, if you're not there already, you're at that saturation point now, especially with that entry level home buyer, where we'll jump to the next.
Well, I want to discuss the housing start number, though. On the surface, it's a big number, but when you dive in a little bit, single family homes, that's a flat number. The gain this report was all in multifamily.
Yeah. So, Mike, what I like to do, I put out with my emails with housing starts, I put out the seasonally adjusted numbers, and then I go back and analyze the actual numbers. And I think for me, actual numbers are much more realistic because it's what's actually being reported. You've got the seasonal adjusted stuff, and there's the seasonality involved in statistics versus the actuality of what's being reported. And so here's we'll look at we'll come back to this one. So units authorized and permit issuing places. And so here's your seasonally adjusted. These are the headline numbers that are reported. This is what Bloomberg, CNBC, this is what everybody picks up. Here's the not seasonally adjusted. And this is what I look at. And when you look at, so here's actual permits, there's a massive, so look, here's March, massive increase over February of this year. And then you go back and look at March of last year, we're issuing significantly more permits on a total basis. When you look at, this is the one unit, this is your single family. Again, you've got this massive month over month increase. You go back and compare it year over year, actual single family is down where it was a year ago. And this was, bear in mind that last March, last April, those are your high water marks for the year. It didn't get any better than this. So you're behind from a single family standpoint from permits. And then here's your multifamily segment. You can see here's your big actual increase in permits. So here's your permits. And this number is statistically all over the place, where when you look at multifamily starts, multifamily permits, this has got a statistical variance that's just massive. Like you're talking about a 10% variance in either direction at a minimum, where this number is up and down like a toilet seat. The single family component's usually a little bit smoother. You don't get as much variance in the single family component. And so these are your permits. So let's jump to starts. Let's see here. Okay, so here's starts. So here's actual starts. You can see this is a massive number, which you're ahead of last year's pace, 140, 60 month. This is last March versus this March. The single family component is lagging last year. So you go to the multifamily and you can see, like you just said, the multifamily component is making up this big increase in starts and permits. So you're still getting good organic growth in single family, but when you actually dive into the numbers, like you suggested, a lot of this growth is at the benefit. It's the negative growth of single family shifting back to multifamily.
And the reason we look at this is to get a sense of demand. Like we're in the lumber market. We want to know what the demand is for lumber. Obviously, there's less lumber that goes into a single multifamily unit versus a single family home.
Yep.
and we've been talking, everybody's talking about how hard it is to get into an entry level home. um, what are those people going to be doing? And the reality is they're probably going to be renting, maybe buying a condo, but definitely buying something smaller. um, so while the actual size of the number of starts is big, is the reflective demand for lumber as big? I mean, now I'm starting to question that.
No,
I'm
I think the numbers have so far this year, even into the end of last year, Q4 of last year, you've seen this consistent shift away from single family as interest rates have increased. You've seen this push away as lumber cost, as you've had all these supply chain issues, inflation. You've seen this shift away from single family back into multifamily. That's what people can afford. And that's the unfortunate thing. A year ago, the tailwinds were there. The green shoots were there for single family. That was leading the charge higher. Now it's the multifamily component. And we see this firsthand with a lot of the companies we consult with, where the multifamily, look, there's still good growth in single family, but the uncertainty is much greater. Boots on the ground and talking to home builders versus the multifamily component. They're still quoting all these new jobs. There's no signs of a significant slowdown with multifamily through this year into Q4, Q1 of next year. I mean, that's how far these guys are quoting jobs and looking to get coverage right now.
And let's just talk about how the multifamily buyer buys lumber versus the single family builder. The single family builder, I'm going to go out on a limb here and say they're pretty much a 30-day pricing. They're going to walk in and, okay, I'm going to start this job. What's my pricing? Let's go. Now, the multifamily most likely is going to be being built by a developer, and they're going to want to know what their cost structure, and they're going to buy ahead. And I think we may have saw that, the run of prices into February. Maybe that was these multifamily guys finalizing all their material purchases, and for jobs that are going to start here in the late Q1, early
Yeah, no,
Q2.
I think that's I think you're spot on with that, and that we see it with multi now, where let's say you're going to put 4 or 5 units in the ground, and you're going to start taking delivery in April. On the job, sticks in the ground is going to go through end of summer, beginning of September, October, where if you needed the wood to start unit building 1 and 2, and you were going to break ground, let's say April 1st, depending on geographically where you're at, there was the big push, go get the wood. You're going to run into shortage issues with OSB, with framing lumber. You need to have physical allocation of your materials, and you're not just talking, framing lumber. You're talking plate stock. You're talking having the ability to get the concrete, everything else that site construction, getting everything laid out from a drainage standpoint, to be able to put the sticks up, just to be able to frame to get to that point. Now, as you kind of look down the timing curve, you start looking, okay, building 3 is going to kick off June 1st. Building 4 is going to kick off July, August 1st. Now there's less of a sense of urgency with a falling market structure where let's wait. We know what our drop dead date is to go buy the physical wood. And if prices correct harder in Southern Yellow Pine, then maybe we'll warehouse it. We have the ability to warehouse the OSB, climate controlled. Maybe we have the ability to warehouse the framing lumber. But with everything kind of the falling out of bed structure, that sense of urgency to accumulate, especially at the numbers we're at right now, there's nothing obvious about today's numbers. Maybe in Southern Yellow Pine, but when you look at the other species, and we'll reference this in some later charts, there's nothing obvious about these numbers. You're probably just going to buy just in time. You're going to continue to kick the can down the road 2 to 3 weeks out based upon that lead time to get the wood to the job site and nothing more. There's no incentive to accumulate, especially when you're not, reversion to the mean with pricing. You're not back to obvious investment grade levels. Maybe you're there if you need the wood in the next 6 weeks, but beyond that, there's nothing obvious about these numbers. You're going to lay off the risk in futures, and as you get the convergence like we've seen, conceivably today, then you're just going to transfer out of the futures and into the physical cash.
Yeah, absolutely. All right, let's keep moving along here.
So this is, I'm going to just hit on this. Here's under construction, and then here's housing units completed. I want to point this out. So there's a nice bump up month over month, but look at houses completed for March versus March a year ago. So the high water mark was March through July. You were at 120 to 121. You're nowhere near these numbers you were at a year ago. So to say that supply constraints aren't negatively impacting this market, the numbers show that, building permits starts, that's what we'd like to do. Housing completions is what we can do. And when you look at housing completions, there's still significant issues in completing homes. Even though we're uptrending like we should, we're still not on pace where we were a year ago.
No
Yeah.
garage doors.
Yeah. So I'm gonna so here's the other big one I wanted to point out with housing, and then we'll shift away. Here's NHAB housing market index. This is builder sentiment, and you can see it's been trending down for the last 4 months. Here's your the red line is single family starts. Look at what your traditional leading indicator is here. It's builder sentiment. They see what lies ahead in the pipeline, and so now you're starting to get a disconnect where, is it conceivable for starts to continue to trend up when sentiment is trending down? Well, here's going back to 2012, and this chart goes. You can look back to the early 2000s. This is usually your builder sentiment is your leading indicator for housing.
Well, it's still at a pretty big number. It's just going in the wrong direction.
No. It's still a good number, a massive number. It's just that the idea that you're going to see all this organic growth, I think for again a laundry list of reasons that's getting more and more difficult to see that continuation of organic growth. And so I again we'll run through this, but at a 5% rate. This is the headline. This was Wall Street Journal this morning. This was CNBC Saturday. Like talking about interest rates are in the news. There are headlines where 5% rate on a $300,000 home. A year ago, that payment would have been $1,271. Today, it's $1,610. CNBC took the median home price of $408,000, 5% rate. A year ago would have been 1383. Today it's 1752. So, your money's not going as far as it did a year ago.
That's a big deal.
Yeah. And then, we'll get into lumber here, but we talked about CPI, running at an 8.5% clip. We talked about wage growth lagging CPI, lagging inflation. So I saw, like this one was on, pull this off of, I think, LinkedIn, but you can see, job stayers versus job switchers. Who's getting the pay raises here? It's job switchers. People that are staying with their current companies are woefully lagging salaries to the job switchers. And so here's the other big one, that this is, we talk about how come you can't complete homes. Well, there's just the missing workers. And here's pre-COVID, you were on this nice uptrend. COVID happens, and you can see you're not even back to pre-COVID type levels as far as U.S. workforce. So you got a long way to go to fill this gap between the projected levels, what's needed versus what's actually out there right now. Here's interest rates. We'll skip over those. So weekly continuation. We're holding in this 62% retracement area. We held that 850 area. We're obviously have bounced hard off of that. So, that's a positive thing. Technically, the market has definitely bottomed out for the time being. Price curve wise. And again, this was a reflection of yesterday's close. May right now is 939. It got up to 951. So you can kind of see it, how these back months have all kind of funneled in this 850 to 800 area. and you still have May at this big premium, cash at this big premium relative to everything else. You can see it a little bit more clearly. So this is May futures against the average of the four next months. So July, Sep, Nov, Jan. And this doesn't reflect May. This reflects what this averages as of yesterday. So the other 4 months are telling you that there's, as of yesterday's close, there was an $830 average in July out versus May. So, you need to narrow this gap, and you can see how big the gap was. It's starting to narrow. So you're definitely seeing more upside potential in these back months relative to May. And
So,
this is why it's important to understand spreads. Pure and simple. The same guy that owned May has watched July. That spread went from 175. It's in today to $55. So in just being long a contract of July versus being long a contract of May, if you were long the May when that spread was 175 over, well, you lost out on that kind of money relative to July.
So something I'd like to point out, we're discussing some of the headwinds for sure for the lumber demand side. But obviously you look at the back months, and when you are all the months starting with an 8, there's optimism. I mean, $800 a thousand historically is a big number. So while I think, we have headwinds, no one is that sure that this thing's going to fall apart. If that was the
No,
case, we would.
and so here's, you could see this is your continuation futures yearly average. So today, if you take all the months, you're about an 804 average versus a year ago, we were 1127. Again, still on our way up a year ago to that 1700 area. 2 years ago, we were at 880. You have to go back to 3 years plus to be back sub $500. So, what's reality? Is this reality or is this reality? This is the reality the buy side would like to be. I'd love to buy $500 lumber, but the reality says, yeah, that $800 number is the lesser of two evils, where you have a lot of interest to accumulate these back months because, again, Mike, you're coming out of a cycle where we were just up at 1,300. You were just up at $1,200, $1,300. So a lot of these jobs, from a multifamily standpoint, from an end user standpoint, we're quoted at $1,100, $1,200 a thousand. So it's a no-brainer to go get the coverage, whether you're using options or futures, and just cover in these back months. And as the convergence plays out, you come out of the futures and go buy the physical cash. And that's why you're seeing the interest. That's why these back months are having a difficult time selling off, because this is where your accumulation is taking place in July on out to, July through January. You're seeing that
Well,
accumulation.
and if you flip the script and say, what would you sell at? I think the sellers say, I'm willing to take the gamble. I'm not going to sell below 800. I think we have the potential to be higher than that. So obviously, equilibrium has hit 800, meaning buyers are willing to pay that and sellers are willing to think of that that's a good enough price. So I just think it's kind of interesting. We're sitting here talking about higher interest rates and inflation and all these headwinds, yet the historic lumber price curve looks pretty darn strong right now.
Yeah. No, I think it definitely tells you that, the reality is, unlike the complete fall off a cliff move we witnessed last year, you're more likely, if you're going to see the pattern of lower lows and lower highs, it's going to be more of a stair step down pattern than that, roller coaster plummet pattern, where I think there's just too much business out there. The inventory in the field is still relatively lean, to where that gives you the scenario of probably the lower lows, lower highs, just because there's too much need out there. And that's what the futures curve is telling you, is that, yeah, you go back, there's interest of people see value in these numbers based upon where they've quoted jobs.
All right.
So from a basis standpoint, last week, May was 203. cash minus futures. So you had a $203 discount in futures relative to cash. Today, this is based upon yesterday's settlement in May and then last Friday's print. But the reality is you went from 203 into 81, and you could make the case that this is sub 50 or even money at this point. So you've had, for all intents and purposes, in my mind anyway, you've had convergence in the front month futures relative to where cash is today.
Agreed.
July, a week ago, 291 differential into 152, and this is this is 120, 110 right now in real-time markets. September 315 into 175. This is probably closer to 150. May, July, we talked
Let's
about.
just jump back to
Yep,
those
sorry.
two. And,
Yep.
That's talking the basis versus spruce 2x4.
Correct.
When you take start looking at Southern Yellow Pine 2x4, there's probably opportunity to basis trade it, to buy the physical and sell futures at this point.
Yeah, I think that's a good point. So yeah, whenever we talk about basis, for this podcast, we're always going to talk about Western SPF 2x4s versus futures, but it's customizable where basis can apply between different species. You can look at basis between Southern Yellow Pine and SPF, Eastern or Western, versus Doug fir versus hem fir. Where you can look at, and then you can look at futures versus those other species as well. But when we talk about basis, we're always talking about Western SPF versus futures. And so here's your basis. And again, this is basically a continuation. So you can make the case that again you're back into this sub 50, sub 25 dollar area after having this massive discount in futures relative to cash. Well, you've had futures stabilize now, and you've had cash start to come off in buckets to narrow this basis now. May, July future spread. Again, this spread, the initial target was the $60 to $41 area. Today, that spread has come into 53.70, and I still think, initially you're going to come into this, 40, the 200 days in the 42.11 area. So this becomes your Bollinger Band is 50. This initial low 50 to mid 40 area is the likely target, especially as you grind through the rest of this month to see where that May, July spread comes into. And the reason I say that, when you look at July SEP and then you look at SEP NOV, both of these spreads have collapsed into 20, sub $20. The July SEP is traded into 15. SEP NOV is traded into 15. So why does May deserve to be at this big premium when the rest of the spread structure is calling BS on it and saying, no, you belong at a carry of $15 to $20? And that's kind of what you're reverting back to with this with this May, July. I would rather own July SEP NOV than speculating on May at $60, $55 over, where there's still a lot of float. And especially with May rallying the last couple of days, it's a legitimate question. Does May deserve to be at even money or a premium to physical cash this far out? I mean, it's only the 19th of April. You're not even in the spot month yet.
But as we know, from here on out, May is going to lose open interest.
Yep.
And July is going to become the relevant contract. We're not quite there yet, of course, but
yeah. So a week ago, May was 1340, July was 1050, total open interest 2780. Jump forward, you can see that officially as of yesterday, July became the lead contract from an open interest standpoint. You're still in this 2780 plus area. So whatever you're losing in May, you conceivably lost you lost about 200 to 250 contracts. You're not only just picking it up in July, but you're also picking it up in these back months. And again, that goes back to the price curve we referenced, where there's comfort to own these back months in the sub 850 area versus messing around with May. And so from a CFTC standpoint, last week versus this week. The big thing that jumps out to me, Mike, is the managed money component. Let me see if I had notes here. I don't know what happened. Let me see if they're still here. I did have notes down here. I think I remember them, but 125 now. So managed fund longs have dropped below managed fund shorts. You know, when this started back, I think it was around the 18th of January, this number was 750 plus. So you've had an 83% decrease in managed fund longs with the 45, 44% drop off of the highs in futures. So the managed fund longs have completely disappeared and they're being replaced by commercial longs, commercial shorts. Um, Again, when I look at this segment, other reportable longs, non-reportable longs, chances are these are your front month longs, and this is what could continue to pressure May, or why could May go back and retest the lows? It's still the margin call element of these longs right here, where you're still net long with small guys and other reportables, where this concentration in May and owning May at a big premium relative to everything else. That's still something to watch as far as who could get liquidated out of May here.
The numbers that jump out at me there is the size of the industry positions,
Yeah, yeah.
and the fact that they're pretty darn close to equal. Um, I just think it's interesting. It seems like this 800 to 900 level is a comfortable level for both sides of the equation.
Yeah, no, I think that's and this, again, I think this is an encouraging thing. You want to see the industry participate, and the fact that these are both growing is a good thing in sustaining the open interest one way or the other. Where this is your, these numbers here can get washed out with, technical changes on the charts or with margin calls. This segment here is always more vested. There's usually an underlying reason to use it. So this has more staying power. There's a reason you're in futures more so than the speculative element with this segment. The one thing I wanted to point out, and I had people asking last week, and I spoke to the CME on Thursday. We have the semi-annual price reset that ended on Friday, the 14th. So that 45-day window prior, they were calculating the settlement price in July. So long story short, effective the 2nd of May, CME will revert back to these price changes. So the new limit, we're going to go from 50, the current limits right now are 57 and 86. New limit's going to be somewhere around 49 to 50. If the front 2 months, July or September, lock limit up, lock limit down, either or, can be either July or September, just like today, then you would expand out to 74 to 75. So there's a slight decrease from the existing limits today. And then just a reminder that, May 2nd, spot month, no limits in May.
And I think those are solid limits. I think those are totally realistic.
And then the other thing I wanted to bring up, I still don't have anything in writing that I can send out. I've obviously seen the rough drafts. They're about 95% through the rule book of the new contract that's going to be rolled out. They're tweaking kind of some, the what if scenarios. So fingers crossed here that this gets rolled out this year. That's what I've been told, and as early as the July contract. So as soon as something is definitively in writing that we can send out, we will send it out. But we are moving forward where you will see the evolution of lumber. It's going to happen this year from what exists today. You're going to have the new contract absorb the existing contract.
That'll be interesting, to say the least.
I think it's gonna be a good thing. Where conservatively, I think we'll look back a year from now and we'll talk about 2,700 open interest, where you could conceivably be at 15,000 to 20,000 plus. So it's going to be a very good thing for the industry as a whole. Last couple of things, I know we're pushing up against it, but shipping. So I saw this on, I had somebody send this to me. It looks like, I don't even know what it looks like, but this is the port of Shanghai. China still has their zero tolerance policy with COVID. And how's that working out? Where here's the port of Shanghai. Green is ships moving, red and orange are ships not moving, and you can see all these ships kind of circling the port of Shanghai that can't get in to the port. So the idea that global supply chain is going to be relieved or is going to get better, you better hope nothing's coming out of the port of Shanghai anytime soon.
This, I'm telling you, man, this supply chain thing just keeps getting stranger and stranger. The minute you think you may have turned the corner on it, you realize
Yeah,
there's S
and
curves ahead.
so you're seeing car velocity normalize versus the previous 2 years now. Um, when you look at Canadian rail traffic, it's still upsloping, but for every week that it improves, there's a week of complete disappointment where this is still lagging. And in talking to some of my Western mills, the collective answer is, well, what's wrong with CN? Is it mismanagement? What's the underlying issue with rail cars? And the consensus is that because you've had export business to Asia, China fall off a cliff, typically you would have a 5-day turnaround of cars going from BC to the port of Vancouver and back. So there are no cars going to the port of Vancouver because the export business has just completely slumped off. So you've got all these cars in transit now going into the States. Instead of having a 5-day turnaround, you're talking 2 weeks, 3 weeks, 5 weeks to get these rail cars back. And that seems to be the consensus on why, there's really the jaggedness still exists in this number where you're just not getting the rail car return like you normally would at the CN, at the railroad level.
That's interesting. Well, and it means that the wood's not going, obviously. So, is that a foreshadowing? Do we, will we see more Canadian wood hitting the U.S. Border?
Yeah, no, I think that's going to be interesting. Because you keep hearing the horror stories of all the finished goods inventory sitting across the border at the mill level, and we'll see if that play, eventually if that, how it gets here. But in talking to the sawmills, as much as they want to say it's getting better, it is getting better. But to say you're going to have any normalcy, reversion back to normalcy, you're probably talking well into May or even June at this point from what's going on today.
Right, and here's a little anecdotal information. There was a big stud mill up there reduced their work week from 5 days to 4 days.
Yeah.
I mean, why would you reduce your work week with lumber prices where they're at? The stakeholders of your business would say you're crazy. So there's some, extenuating factor outside of the demand for your product.
Yeah, no, you've you physically exhausted all avenues of storing your wood to the point where you just can't produce it because you can't store it.
Exactly. So, I guess wrapping up here, there's a lot of good information out there. There's a lot of uncertainty. I think, the volatility of the past is probably the magnitude of it may have been tamped down a little bit, but I think the switching, the movement is still going to be there. I think we are going to see directional shifts in this market up and down. We may not see the magnitude of the moves, but it's going to be volatile.
Yeah, no, I think volatility is slowly being reduced, but it's not going away. Hey, did you have the? I know Jory wanted us to post the poll question. Do you have the ability to
What?
bring that
She
up?
and I did not get together on that. I think we'll try to roll that out
Okay.
next week. That's something we're going to start doing, which will be kind of fun. We've built up a loyal listening base, so we'll put out a poll and we'll see kind of what everyone is thinking out there, and check the temperature of the industry.
Yeah, no, it's all good. There's always something, always something new and exciting to talk about. That's for sure.
All right, we'd be remiss if we did not. Oh, Jory just put up a private chat. I think if you check the LinkedIn page, you'll probably see our poll question, and we can discuss it next week. We've got the Futures University. Is that next week?
Oh, yeah, that's next week in Kansas City. We've got, sorry, let me pull you back up here. We've got, I think we're up to 21 people, just a good cross section of sawmills to end users, home builders, and everything and everybody in between. So it's going to be a good, it's a good number. So we're excited about that. So yeah, looking forward to it. Go lumber. Education wins. So as you
Absolutely.
know.
And of course, you can still get in that seminar if you want to. So with that, we're going to sign off. I'm sorry. When does that start? Are you going to be around Tuesday next week?
Tuesday we might have to record it earlier because I think I'm flying right around that time frame. So we
Okay.
can talk. We'll figure it out. We'll do something on Tuesday. Might have to be slightly earlier.
Okay, not a problem. All right, thanks everyone. Be safe out there, and we will catch up with everyone next week.
Sounds good. Thanks a lot, Mike. Good
Greg,
seeing
hang
you.
on before we
Okay.
end here.